Alright, let's get started here. Welcome to Shareplanner's latest video podcast. My name is Ryan Mallory, and I am going to be going over the trade in Google today. I have up on the screen a 3-day chart, 3-day intraday chart of Google. It's using 30-minute candles, and we actually did not get into this trade until about 1:30 in the afternoon, and it wasn't quite what I would say from a candle perspective. The formation of the candle is something I got really excited about, but I felt like it was a decent trade that I had the odds in my favor that it would go in my direction. Our trade was based off of this particular candle right here, and as you can see, it actually formed a new low before having a nice recovery towards the end of that 30-minute period. And what caught my eye was the fact that during that same candle session, the NASDAQ and Apple and RIM, saw exponential moves during that same period. Google saw a little bit of it, but not enough to break out per se, and it was at the bottom of a channel, so I thought it had a good chance of bouncing off of its lows since the market had been pretty much dead and trading sideways all day. It was worse than watching grass grow, frankly. Nonetheless, we put in our entry price at 436 and 31 cents, and we put our stop loss right below it at 434.09. And this is a perfect trade just to say, keep your head in the game. You just never know what might happen here. We had a boring day in the market. It didn't look like the market was going to do anything after yesterday's huge rally, but last hour of the day, market decided to just totally take off. So it was a very exciting trade in that regard, but leading up to it, very boring. So we barely hit our entry price in the following candle at 436.31, but after this period, the following period is where the real excitement started. We had about a $2 pop here, and then from there we were really off to the races. It goes up as high as, in the final 30-minute period of the trading session, as high as 445.75, which would have given us an actual 4R return on the trade, which is an awesome trade. 4-to-1 risk or reward to risk ratio. You can't beat it. So, however, I got out at 440.62. Sort of kicking myself in some ways. I still managed a 2-to-1 return. Great return, $500. Not going to complain about it. However, had I just had a little bit of more sense in me to just notice the huge spike in volume that we were getting in this 30-minute period here, as you can see right here, and go to Yahoo Finance and type in the Google symbol and see what the heck was going on, I would have had enough sense to realize, oh yeah, Google is reporting earnings after the bell today. And what's going on here? You got the rumor mill stirring up. People are trying to get in before the bell because they think they're going to be able to capitalize on a huge earnings report that actually did not happen. It actually fell in after hours. But still happy about the gains. Could have been a 4R return or 4 times the amount of money I risked. Instead, it was a 2R return, which is 2 times amount of profits versus what was risked on the trade. So, lesson here, sometimes when you get a huge price move like this, which is parabolic, don't always have to look at it from a technical sense. That's what I did today. I should have looked at it more from what was the psychological underpinnings of this particular move, because typically stocks don't make this kind of move without there being an underlying event. So I should have looked at what was the real driver in the stock, and it wasn't a technical move by any means. It was a pure psychological move that really didn't have any basis at all, because the earnings disappointed because it dropped after hours. So nonetheless, good trade. I'm not going to lose sleep over it tonight, but could have done better. And that is all for our Google trade. I hope you enjoyed it, and we'll be on the prowl for some more trades tomorrow. So long.